Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to discuss Snap's Q2 results. It was a very strong result, guidance is strong. We're going to discuss some of the next opportunities for its growth trajectory, and then we're going to talk about the unavoidable fact that this is quite a punchy valued stock. So let's get into this, right? So Snap's guidance for the next quarter is up 60%. This is on the back of growing this quarter at 116% year over year. So that's a very strong quarter came out. And obviously the stock rallied significantly, was up 23% on the day. So there's a lot here to really drive this story forward. I've picked out one aspect here. So one of the interesting points that I point out is that even though North America MAUs, these are monthly active users, are not really growing so strongly, it was really ARPUs, average revenue per user, that really shown very strongly. So here in the graph you can see North America RPUs were up 116% year over year. That's a very strong pricing power, and it really talks to the aspect that even though you don't get a lot more growth in terms of MAUs in North America, because that market's probably getting close to saturated, advertisers are really eager to get on the platform, and you can see here with RPUs so strong. Obviously this compares against probably a slightly weaker period in Q2 of last year, but all in all this is a really interesting story right here. So what I wanted to talk about is that there's this new opportunity here. So spectacles is something that Snap is kind of trying to develop into. So for some investors, they were quick to notice that Snap is a social media platform, and they've been quite savvy in the way they've managed without any technology, without any hardware, to grow their revenue. So by Q4 of this year, they're going to be a 4.5 billion revenue growth rate, run rate. So it's a business, a social media platform that's really just leveraged off everyone else's technological investment into hardware, such as Apple or whatever, or Android or whatever, and they've been able to build this whole ecosystem around other people's cameras. So now that they're going into spectacles and they want to grow out this opportunity, it's kind of an interesting move. On the other hand, what Snap is saying is that their AR, augmented reality technology, is so strong that there's other opportunities within spectacles to really differentiate Snap from other platforms. It not only gives users a more immersive way of telling their story, but also for shoppers. This is an opportunity, for example, if you want to try on sunglasses or shoes or something, to really get an impression and to make it much more personal, that shopping experience. So this is something that's quite interesting, and Snap is quite quick to say, okay, we're not really quite sure how this is going to play out, but we're trying this, and it is a possible new wave of growth opportunity. So there's still some things that need to be ironed out in terms of technologies. For example, when it comes to fitting on a shirt or something like that, how it hangs over people's shoulders, it's not really smoothed out quite now, but they're trying to minimize the amount of returns that shoppers would have, because obviously that's something that for the industry, for the retailers, is quite a large cost when people try something on at home and then they return it. So digital shopping is obviously just continuing to grow, and how shoppers adapt to that experience as much as possible. So this is one way that Snap is trying to differentiate itself and possibly grow out its revenues in another way. So now this is the unavoidable fact. Snap is priced at 29 times sales. I mean, this is really not a cheap stock. And for investors to come in now and consider this investment, you're not going to get a lot more multiple expansion. So I just give a comparison here with Pinterest. Pinterest is priced at 19 times for sales, and Pinterest is no pushover. Pinterest is still growing quite strongly. So it's a case that Snap is really pricing in a lot of optimism, positive sentiment, high expectations, excitement. So just to caveat that out, you really have to think about that. On the other hand, on the other side of the equation, you can see that for Q2, the EBITDA line was up more than 200% year over year. So it's a really strong top line growth, and it's really passed on to percolated all the way down the income statement, and the EBITDA growth was very, very strong too. So even if we look out to Q3, as the top line starts to kind of slow down ever so slightly, and comes up at approximately 60% year over year for Q3, the EBITDA is still expected to be up more than 100% year over year. So top line growing, and it's working off, and the bottom line operating leverage is really just taking off as well. So there's different opportunities here for shareholders to be rewarded. One of the big investment risks that I find here is that, yes, there is a lot of optimism right now, but you're thinking that the majority of the pricing power is coming from North American users, and that's only growing at approximately 6%. So although investors are very bullish right now, if we look back to the first half of 2019, pre-COVID, user growth in North America was already very flattish to even slightly negative at the first parts of 2019. So investors at some point, when the valuation gets very high, may start to kind of say, okay, are they really growing their user base, or is it really flattening out? So sentiment can be one day very bullish, and then things can turn quite sour. And if they miss some kind of results in a quarter with a stock price at 29 times forward sales, the stock could be primed for a sell-off. So those are some thoughts, some considerations that I wanted to share with you. As always, if you want to find out which stocks I'm interested, don't forget to check out my marketplace. It's called Deep Value Returns. I'll tell you the stocks I own, and you're welcome to do a totally free trial to see if it suits you. Cancel anytime before 14 days and you won't get charged anything. And hopefully you'll stick around if you enjoy it, and we'll learn some things off each other. See you soon.